Today we have Peter Tchir. He is Head of Macro Strategy at Academy Securities. Peter, it's such a pleasure to have a fixed income specialist on the show. I guess you could say I'm head over yields to have you. How are you today?
Very good. How are you doing?
I'm well, thank you. So yeah, let's start with yields. Just a week ago, the spread with treasuries was widening like crazy. Now talks on the table about a flattening yield curve again. Is this pending a recession?
I don't think it is. Normally, when you get this flattening of the yield curve, especially if it inverts, it's definitely a precautionary thing. It did happen ahead of the 2008-2009 financial crisis. I think this is a little bit different because there's so much going on with tax reform that it's causing corporations that had a lot of offshore cash, which is held in short-term debt, to sell that. So that's pushing up the front-end yields. And at the back end, the other thing that's occurring is the cost for underfunded pensions is increasing next year, or this year now. So they were pre-funding that, and they tend to buy long-dated bonds. And they also had the tax advantage, just like you and I, when they put the money away into the pension funds, they get the tax deduction. So they wanted that tax deduction in late 2017 when tax rates would be higher. So I think that's shaping it.
And tax reform has had a big toll on high yield and junk bonds, correct?
Yeah, the high yield market struggled for a little while because when tax reform first came out, there's some implications that if you pay more than 30% of your earnings away in interest, you can't deduct all that interest. So that had a bit of a problem effect for high yield for some of those companies. But that's all over. Right now, at the start of this year, high yield's on fire. The high yield new issue calendar is great. They just issued a company, Olin Chemicals, issued a 12-year bond, which is very unusual in high yield. It's probably been 2 or 3 years since we've seen a 12-year bond issued. It's normally stuck at 10. So I think that tells just how healthy the high yield market is.
And should we use that to predict market performance, equity market performance?
I think you can look at small caps and compare high yield to small caps. So if high yield does poorly, it's going to drag down the small caps. I think right now it bodes very well that small caps can continue to do well. And I think it also kind of shows that we're going to see more M&A activity.
And in this marketplace, passive investing has been really popular. What ETFs are gaining traction now or trending?
You know, it's been interesting. I just saw it out in the New York Stock Exchange. They have the ticker for J&K up there. So J&K is one of the high yield ETFs. So I would say high yield tends to be the most popular part of fixed income ETFs, where you see HYG and J&K are competing products. They're very appealing to a lot of people. And I like those for trading purposes. 2 bond funds that have done very well, BND and AGG, are aggregate funds, and they track a lot of money, but I don't think they're a good way to invest. So I would prefer if people took it out of this broad bond market and gave it to specific sectors, because I think they would actually have better returns and more control.
I like how specific you get, Peter. That's really cool to have on the show. And a while back, I heard you mention you like MLPs in the energy space. Now, crude has been on a tear. Are you still interested in MLPs?
Yeah, I like MLPs because we did think crude was bottoming, so I think that's continuing. But I also look at DC, and DC is very, very supportive of the MLP space, right? We really, I think, want to create energy independence. And to create energy independence, we're going to have to move energy around the country, so that helps MLPs. And as talk comes on about infrastructure spending, some portion of that's going to find its way into the MLP space as well. So I'm actually still positive of this. I would avoid the utilities, because I think utilities, A, they get hurt when energy prices are going up, but B, I think yields are ticking higher. I think the 10-year currently at 255, probably gets to 270, 280, which isn't a disaster, but that's going to impact something like utilities more than MLPs.
Well, Peter, I got to give you a lot of credit, not just because you are a credit guy, but because of your call on Bitcoin. You said it was going down in advance. Now it's under 10,000. Is this a fatal trade? I
don't think it's a fatal trade. Okay. I think we have to get back to probably around the 5,000 level. And I apply a lot of the same methodology to other things. You look at different flows, you look at different products, and there was this big ramp up in anticipation of Bitcoin futures being launched. There was some year-end stuff. There was certainly a lot of issues in and around the Koreas. I think as all those are coming back, you're going to see some people pull out. And one thing that I think is permanently damaging for the Bitcoin is the Bitcoin futures got stopped a couple times yesterday. So they were limit down at 20%. So if you own Bitcoin via the futures, there was a period of time you could not get out. So I think that's actually longer term detrimental. So not only do I think we'll get this further pullback, it's going to be harder for it to rally. I do think, and to be long-winded here, but there are other digital currencies that are gaining traction. People are looking. There's a lot of flaws with Bitcoin, and scalability, energy use, how long it takes to solve problems,
Yeah.
the amount of wasted computer space when you try and solve a problem and you're not the winner. So I think it's not the end of Bitcoin and definitely not the end of digital currencies, but we were due for a pullback.
Ah, all right. Well, Peter, it was such a pleasure to take a look into the future with you in 2018. Awesome to have you on the show. Hope to talk with you again.
Me too. Thanks very much for having me.